Okay, everyone, thank you very much for your patience. 皆様お待たせいたしました。続きましては、機関投資家が描く RWA トークン化の設計図、RWA トークン化による金融界の変革をお届けいたします。Our next presentation is Institutional Blueprint for the Tokenized RWA Economy, Strategies for Traditional Finance in the Digital Asset Revolution. それでは早速こちらの方々にご登壇いただきましょう。Okay, please join me in welcoming our guest panelists. First, from Tezos, we have got Mr. Arthur Breitman. Next, from Chainlink Labs, we have got Mr. Nikki Ariasinghe. And from Sony Bank, we have got Mr. Kaya Kanamori. Moderating the session, representing 8Rose Ventures, is Mr. Naoki Tazawa. Okay, everyone, please come on up to the stage. それではゲスト、モデレーターの皆様、ご登壇ください。会長の皆様、拍手でお迎えください。Let's welcome them with a big round of applause.
Good morning, everyone. Thank you for joining us for this session. The session title, I repeat, is Institutional Blueprint for a Tokenized Real-World Asset Economy, RWA. So I'm Naoki Tazawa. Just a bit of myself. I helped Coinbase Japan launch and expand until 2023. And now I'm with 8Rose Ventures, a venture capital, and I look after Web3 and a few other fintech good stuffs. And now this topic, I guess, is one of the hottest topics in Japan right now. For those of you who follow Japanese crypto news, you had the announcement of one of the crypto startups announcing that they are going to issue yen-denominated stablecoin. And then you also hear about large financial institutions like SBI collaborating with startups to build RWA infrastructures and platforms. So I myself personally really excited about this topic. So with further ado, I do like to introduce our great, amazing panelists here. So I'd like to just go around the horn. Make yourself, introduce yourselves, and share the audience who you are, and hopefully some fun fact about yourselves as well. So may I start with Arthur, please?
Hi, thanks everyone. So my name is Arthur Breitman. I'm a co-founder of a protocol called Tezos, and Tezos is a leading blockchain that is known for its governance model, which is participative. So every stakeholder of the chain actually takes a part in controlling the future of the chain. It's a chain that has upgraded 18 times over since its launch in 2018. And Tezos is also known for pioneering proof of stake, and also now for its push towards extremely high throughput capacity and developer experience.
Thank you, Arthur. And moving on to Nikki, please.
Hi everybody, Nikki Ariasinghe. I lead business development for Chainlink in Asia Pacific and Middle East. For those of you who may not know, Chainlink does essentially two things. One is we bring data that's off-chain on-chain in a highly secure and reliable way, very well known in DeFi for data feeds. And secondly, particularly in institutional settings, we enable the cross-chain movement of tokens securely and reliably and connect in to off-chain systems, into corporate systems. So we engage the full range from DeFi, tokenized asset platforms, through to regulated financial institutions. It's a pleasure to be here.
Good stuff.
Okay, I'm Kaya Kanamori from Sony Bank, and yes, Sony Bank is the bank of, under the Sony Group Corporation. Yes, we are driving some fintech or Web3 new businesses collaborating with Sony or entertainment companies, and also utilizing Sony technologies. So we handle about the NFTs, and also we have treated already the digital securities, STO, the security token. And also we are launching some application to enjoy the NFTs, and we do some NFT activities already regards to the RWA. So let me touch upon this topic also. Thank you very much.
Great, thanks, guys. So before we kick off, I just love to ask the audience a question. So, how many of you folks are from an institution, or financial institution, or institutional companies? If you could raise your hands. Okay, just a bit. Amazing. So many of the folks are crypto natives. Amazing. Looking in to collaborate with the institutions or having an interest towards the institutional, collaborating with the institutions. So this is great. So before we just, ask deep dive questions to the panelists, I just want to set the tone, just talk about the landscape of the institution RWA world right now. So, tokenized real world assets have been quite growing rapidly worldwide. Just as I mentioned about the Japanese stuff as well, but it's just growing rapidly elsewhere as well. So, you've got everything from treasuries to bond to funds and, real estates and everything. It's going to be tokenized. And it had been the idea since the get-go that, we could do this, but I think now we're seeing more products that are actually relevant to us. So it's a really exciting timing. And it's not only the product or the business that's been flourishing, but it's the regulations and framework that are being built as well. So, we've got the whole thing coming up. So that's sort of the landscape. But any of you folks want to sort of add on to where we are in terms of the landscape?
I'm happy to take that a bit. It's been an evolving landscape. I sit on the council of the Tezos Foundation. The Tezos Foundation is involved in growing the Tezos ecosystem. And back in 2019, we got involved into several tokenization projects. At the time, people were talking about security tokens. Now they talk about RWAs, which is probably a better term. If not, it's still imperfect. And really, the interesting question has been like, what does the technology bring? What is the product market fit? And back in 2019, what most people were looking for when they were tokenizing was a distribution channel. They would say, wait a second, there's a lot of people who have a lot of money on these blockchains, and if I tokenize my equity, if I tokenize my project, I'm going to get a lot of people who are really interested in buying it. So it was very focused on primary issuance and fundraising. And there was not really this impedance match, because the type of projects that was attempting to do this, I don't think it was very appealing to the type of people who had been money buying cryptocurrencies. There were, however, other benefits. There were benefits for issuers in terms of the simplicity of the process, in terms of the cost involved in the process, potentially reaching a global market, but also complexities that came with the uncertain regulatory landscape and a developing ecosystem. Nowadays, I think it's looking a bit different. And the assets which have had the most traction as real-world assets so far has been cash, right? So cash in different forms. It could be stablecoins if you want to have some yield. It could be treasury, money markets. And there's a few reasons for that. One of these is simply payments. Payments have been major use cases for stablecoins. People wanting to access strong currencies, like stronger than their local strong currencies in their local currency with the US dollar. Crypto traders who wants to alternate between risk on and risk off. So there's been noticed that we haven't yet seen a massive success in other asset classes. Some in gold, because I think there's overlap between the type of investors who are attracted to gold and the type of investors who are attracted to cryptocurrencies potentially. But not all that much. So there's still something that needs to be proven. But now I would say the attitude is different. People are less looking at this market as a distribution market, and more looking, or rather, like less as a primary market and more in terms of what can we build. How can we access the market? How can we connect everyone? And so one project I've been involved is Uranium.io, where uranium, physical uranium or uranium oxide has been tokenized and is available on chain. And what I thought was interesting is that it was an asset that I think has overlap with some of the interest of the crypto audiences, we've seen in the room lots of crypto natives. I like to say that like most cryptocurrencies, uranium is a technologically flavored commodity. And it's also a globally important asset that was lacking a venue for trading. And what better way to basically bring uranium markets to the world than bring it in a way where they can be globally accessible. So it's really the fact that, the title of this call is Blueprint. What is the blueprint here? It's really the fact that there's now an ecosystem of custodians, there's of technology, of auditors. There's all these pieces that can connect together and can provide a superior experience for tokenized assets in terms of global reach, in terms of infrastructure. And that's why, that's what appealed to us in launching Uranium.io on Tezos.
Makes total sense. And can you sort of like elaborate on this ecosystem as to who are involved and whether that's more from a traditional space or more of a new tech people? Who are the participants when you think about tokenizing uranium?
Well, uranium is a bit different from other assets in the sense that there's no issuer. It's a commodity, right? Whereas compared to a money market would have an issuer, a stock would have an issuer. So in most organizations, there's going to be an issuer. There's going to be a legal setup in general that's involved, and it varies, and this is not my main area of expertise. We have some fantastic people on the legal team who would do a great job explaining it much better than I could. But usually you will have a party that's responsible for the tokenization. You may have a custodian that actually might hold a title to the asset and then custodies the assets themselves, not the crypto assets, for the tokenizer. In general, they will be a technical partner in terms of bringing it to a blockchain network, for instance. And then, of course, you have the investors or the buyers on the other side who are going to be purchasing and holding the assets. There's exchanges. So we've seen crypto exchanges now get involved with uranium. So for some, it was their first really real-world assets, which led to some funny conversations. We're saying like, well, why doesn't the team have more of the token? It's like, well, like we think the team should have at least 20%. Well, I would love the team to have 20% of the global uranium supply, but that is not happening. So they're getting into it. So I think we'll also see like traditional finance exchanges get involved into it. Custodians, crypto custodians. It's really this kind of interoperability layer you get out of this. It's like you launch your asset and then, well, so what? So what is on a blockchain? Well, it's like now, whatever your custodian is, it's very easy for that custodian to custody this asset for you.
Amazing. Go ahead.
Yeah, I mean, just to give a slightly different perspective from a geographic perspective in terms of what we're observing, I think what we see, and exactly as Arthur said, it's been a process over a number of years. But I think what's interesting is the market has shifted so dramatically in the last 9 to 12 months. And I think prior to that period, you had some hotspots around the world, namely Singapore, Hong Kong, Dubai, typically across both tokenization of financial assets, but also real-world assets. And then obviously, there's some work happening here in Japan, which has been tremendous, Australia and others. But obviously, since events in the US, what's really interesting and what we're observing is that, to Arthur's point about the proliferation and focus on stablecoins, is that on the digitized cash or tokenized cash side of things, what we hear is that now even the most conservative financial institutions in the region are being forced to answer the question, what is your stablecoin strategy? So even if they don't end up launching one, they're still forced to answer that question at the highest levels within their management teams. And I think that is then forcing this ripple effect throughout many of these very large financial institutions to either understand the technology better, focus on use cases, exactly as like Arthur was saying, whether it's uranium and commodities or other forms, but ultimately needing to find that particular use case and make a business decision about whether they move into that market or not. So I think again, like it's just been a complete shift over the last 9 to 12 months.
Now this is quite interesting, right? I mean, you guys have been in the crypto scene probably more than 10 years. And so are you folks as well, probably, but then what made this big shift recently? What's the big motivation? Was there any event that took place?
Short story is the TLDR is it's the US. So, and again, like just I mean, it's sometimes it's important to understand the mentality within large organizations. And again, in various parts of Asia Pacific, I'm from Australia, where a very large bank, top 4 bank, which top 20 bank globally, will often look at the US as a standard bearer for the evolution of financial markets. And because the US has been not moving this direction until 9 or 12 months ago, that was seen as validation of not wanting to move into this space. And again, as that shifted, then now, again, financial institutions that are highly conservative are saying, well, if the US is doing it, we need to be thinking about it.
Well, that is quite interesting. Just to share with you guys one fun story is that the Genius Act that was just being implemented in the US that drove the stablecoin movement, the bill was being spearheaded by this senator called Mr. Bill Hagerty, who was an ambassador to Japan. And back in 2018, his old buddy, Mike Lempres, who was the chief legal officer of Coinbase back then, said, hey, now you want to go to Bill's house? So we actually went over to Mr. Hagerty's ambassador's place, and he had less knowledge about crypto to my knowledge back then, and he was asking us, hey, what is it? What's the foundation? What does it mean to us? Is it just making money or scam, whatever? And time flies, and he's spearheading this with that sort of concrete idea as to why the U.S. really has to promote crypto. So it's mind blowing in the sense that things just move so quickly when these powerful, smart people just decide, right? So I think I agree with Nikki that this real sort of movement, fortunate or unfortunate, driven by the U.S. is actually a big shift and movement. And I kind of want to ask Kaya-san about this, interest of the financial institutions or traditional tech company. So do you see do you agree with this, current uptick of the trend in this 12 months? Because, you've been connected with the Web3 for a while. I've known you for years and years. So what do you see? Do you see this, big momentum here in Japan as well? Or is it more of like a, past trend that's been continuing?
Okay, thank you, Ano-san. Yes, in Japan, so the big momentum is coming, same as in States. And yes, and regards to the real-world asset tokenization point of view, we in Japan's case, but I suppose in other regions, it's same situation. We have several ways to deliver. It depends on the real-world asset type. And one thing is with the more, let's say, financial point of view, it's more near to the financial point of view, we can deliver with the STO scheme. So it's more financial scheme and digital securities. And so in Japan, already that market is increasing. And also, there is some NFT-based projects, for example, Nata Hotel project. And also in Sony Bank also, we have delivered some real-world asset project, which is with bonsai project. So do you know bonsai? It's the more than 100 living trees. And with utilizing that, the bonsai artists made the bonsai artwork. And it was sold with more than $35,000, so more than 500 million. So, and it was sold to the others. And but the proof of ownership point of view, we delivered NFTs also with utilizing Sony technology, and we capture the shape of the bonsai, and we deliver to the owners. So this is kind of the proof of ownership with NFTs. So in NFTs also the additional way to deliver the real world asset. But it's let's say, depend on the asset and also depend on the regulations. So regulation point of view, it's increasing, well, it's going to be settled at this point, at this moment. So it's the same situation in all regions, I suppose.
Got it. Thanks for that. As a matter of fact, Japan has been promoting crypto for, I guess, almost a decade, right? So, Mt. Gox was actually ground zero here in Japan. The large hacking incident starting from CoinCheck happened here in Japan as well. And, but the Japanese government actually have never given up on crypto. As a matter of fact, they're calling it Web3 now and still promoting. I guess in the previous panel, there was Mr. Shiozaki, the congressperson who was up on the podium panel. He does not hesitate to say that Web3 is next focus point of the Japanese economic growth. So huge big up to the Japanese government for that as well. But again, U.S. being U.S., the largest and the biggest market and driver. So all in all, I think we have a big driving force right now. And I want to shift the gear to more of an institutional adoption. And as Arthur mentioned, there are a few different several participants when it comes to doing this real world asset kind of product and tokenization. So I'd like to pass the mic on to Nikki and ask a few questions from your experience, and especially you guys have teamed up with Swift. One of the, you all know about Swift. It's the de facto standard of transform infrastructure for transforming currency overseas. Can you share with us some of your experience as to what it takes to really sort of work with such a traditional infrastructure to implement a Web3 related product?
Yeah, so we've been working with Swift for well over 5 years now, and working through multiple phases. And part of the reason, to the original question, part of the reason that we work with Swift is, from a Chainlink perspective, we've taken a very pragmatic approach about how we support institutional adoption. So we don't necessarily approach it with, it has to be one particular way. And why that is quite effective in engaging many of these different institutions is ultimately they can continue to use the technology that they're using and then integrate into Web3 over time. So the simple way to think about how Chainlink works with Swift is we've built a connector, and obviously we've got some tremendous engineers within our company, but it enables, from a business perspective and a process perspective, it means that if you're a user of Swift, there are 11,000 banks around the world that use Swift. You can use your current messaging Swift infrastructure, send a Swift message as you do today, without making any changes. Just you change a slight instruction, but you don't have to change your infrastructure. Send that message, and in the back end, it's a Chainlink Swift connector. But importantly, what it enables is you can then enact on-chain blockchain instructions to issue assets, move tokens, et cetera, et cetera. And why that's so effective is, again, they don't have to change anything on their end. So that's one, is just taking a very pragmatic approach and working with financial institutions to figure out how we can best support them. So not taking a dogmatic approach. A second aspect is, increasingly as many of these projects deploy into production, it's beyond just the kind of core aspects of what the technology can deliver. If you think about, Arthur mentioned the importance of interoperability. From an institutional perspective, it's not just about the token movement, but it's also about the security of that movement, the reliability of that movement, and importantly, how compliant the transaction is. And many of those components are beyond just the core technology. So increasingly, as we kind of deploy many of these projects, it's really about applying those kinds of aspects to it. And the final piece, and kind of we joke around on this internally, but ultimately, the closer you get to production, and as you get more into production, you start off at a POC, then you progress to a pilot, progress to a production deployment. As you go through those processes, the less the resource focus is on technology, and the more it is about managing all of the regulatory, legal, and compliance requirements that large institutions have to work with. So, trying to work through all of those different aspects as we progress.
Interesting. Any last-minute surprises that you could share with the audience?
Well, I think not necessarily a surprise, but at least from a Japan perspective, one of the things I'm most excited about is we announced our partnership with SBI Group yesterday. So it's great to have that finally public. And I think what we're really excited by is, to your earlier question, how do we bring the learnings that we have from many of the projects that we've done with Swift and many other institutions globally, and help many Japanese institutions start to utilize the technology.
Interesting, thank you. And I love this aspect of pragmatic versus dogmatic. So I'd like to ask Arthur about this. So, we just don't live within this crypto native ecosystem. When it comes to institutions, we really need to connect with those who are not really sort of knowledgeable about crypto, technology, what have you. So there's always this sort of mismatch or misperception about what it is, right? How do you sort of when you implement these sort of projects, is there anything that comes into your mind as to what you need to be sort of worry about? What do you need to sort of watch out for when you're sort of collaborating, working with the non-crypto institutions?
I think vocabulary is important, and we are in an industry that basically trashes vocabulary. It's terrible. People are really bad at naming things in our industry, and having the right name for a thing is important. And people get confused. I mentioned security token, for example. I didn't really like that name because, for example, uranium, it's not a security. It's a commodity. It's a commodity.
Exactly.
So progress here. That's good. One of the things we noticed was a point of friction with the institution is that when they see an asset on a blockchain, they say, "Oh, it's a crypto asset," and we're like, "No, it's not a crypto asset. Right. It's uranium. It's uranium oxide. It's not a crypto asset." It's like, but it's on a blockchain, and it's a difficult conversation sometimes with regulators and others who. A lot of I think legislation is not they pretend that it is technology neutral, but a lot of legislation is not technology neutral. Even today in the United States on the books, there is legislation which is not technologically neutral that impedes deployment on blockchains. There's also other legislation which I would say is, unfavorably favors, unjustifiably favors blockchain. So it's a bit weird. I think everything should be essentially technology neutral. It doesn't matter how you do it. It matters what you do. And that's I think a mental shift that needs to happen, that blockchains are not necessarily only for crypto assets.
Makes total sense. And technology is always evolving. There's always new adaptability and whatever. But from a regulator's perspective, for instance, they have to categorize things and frame things. And so are the folks who are not in the know of the things. So it's always this everlasting, ever-changing sort of mismatch that you really need to fill the gap, I guess.
Yeah, no, absolutely, and I think it starts by calling things the right way, and it's important, and there's a bit. It takes a little bit of intellectual effort to do it, and intellectual effort is very unpopular, especially in our industry. But I think we need to do better here.
Thank you. How about you, Kaya-san? Because you belong to. Well, innovative, but really big tech company, Sony, but you're a crypto guy within that organization. How do you sort of, handle this, knowledge difference and what have you, and how do you explain to your colleagues what you're doing?
Okay, so the Sony colleagues likes innovation, basically. So for even the engineers, and they like new things, and some of them are very knowledgeable about the blockchain already. And also, another point of view, for example, we are researching several topics already in security point of view. For example, zero knowledge proof technology is already kind of the buzzword in Web3, but before the trend of the blockchain, we are already researching or developing some technology regards to the, for example, privacy or zero knowledge proof or these kind of things also. So in some point of view, it's easy to drive the Web3 related business in Sony Group. But on the other hand, the business point of view, let's say it's a little bit difficult to ensure or crystallize the business, let's say, monetize point of a business plan to explain. Yes, we believe in some opportunity in Web3, but to crystallize this business model or business expectation point of view, that's the, let's say, value for us. Yeah, and then we need to drive the several Web3 business communicating with all engineers and also business, let's say, owners. So that's the key things, I think.
I see, thank you. And Nikki, does that resonate with what you think as, the traditional tech company ought to sort of accomplish?
Yeah, I mean, I think I completely agree with what Kai is saying, and I think one of the most underestimated aspects of the shift in the market and the hard work that's been done over the last 7, 8, 9 years is you now have, similar to Kai's team at Sony, across both, most large financial institutions, you typically have a digital asset team living somewhere in the company. And I think those people are there, obviously they're full-time, they're evangelizing, they're advocating, they're working with business units on use cases. Not everything's going to come to fruition, but I think that constant source of trying to take the organization forward ultimately does pay off. And if you add that up with connectivity into all projects that they do with other companies, the changing market environment with crypto, what's happening in the US, that all starts to add up to momentum. So I think it's somewhat similar to what we see across many other companies, but I think it's super important that role that those core teams play as a nucleus of taking the application forward.
I actually heard the same story when I was moderating the other panel, and our friends from Avalanche said that, the key success of the collaboration with a larger corporation is to find that superstar who actually understands things and spearheads things. So we actually do have one superstar over there. So for those of you who want to collaborate with Sony, go to Kaya-san. Awesome. So let's shift the gear again, and I'm going to ask more challenging questions, and feel free to just reject. But just a bold question being, all right. So starting from now, and if we come back 5 years from now, which market or product do you think will be the most sort of transformed, tokenized RWA, including Uranium?
Okay, so very, let's say, difficult question if it's in 5 years ago. Let's say, in my opinion,
sorry, 5 years from now, so it's a prediction question.
From now, okay.
So, sorry, yeah.
Okay, I see. So IDs, human IDs would be important.
Digital identity.
Yes, decentralized ID or digital ID would be important. And yes, it's a little bit, could be related with real world asset. And also, based on these IDs, the asset would be treated based on maybe stablecoin or the, other cryptos. And so, yes, ID would be important, but also in that point of view, also again, the privacy or let's say, it's all people are belonging to some nations, so it's very sensitive and important topics, but ID would be the key, and it could be kind of the tokenized, I suppose, with the privacy way, or
Yeah, I mean, not a new use case per se, but I think what's interesting is the potential trajectory over the coming 5 years for stablecoins. So I think right now, obviously, there's many markets that are being unlocked as a result of regulatory change. There's huge amounts of interest from a wide range of companies, financial institutions, and large corporates as well, exploring their own stablecoin. And I think market-wise, what you're going to see is that huge amount of interest is going to translate, say, in 2 years' time. If we're looking at, on that trajectory, what you're going to see globally is something like 300-400 different types of stablecoins. Primarily launched by large organizations. Not necessarily purely US dollar as well. I think that'll obviously be significant for particular corridors, particular use cases, but there is demand in certain jurisdictions for local currency stablecoins as well. But ultimately, as a market, you're going to get this flourish. It takes time to implement, but flourish over the next 2 years, and in 2 years' time, you'll have 400 stablecoins, something like that. And then, to your time frame, 4 or 5 years down the line, what you're going to see is probably consolidation, and it'll be back to 20 stable coins or less.
You're the oracle, Nikki.
I think people underestimate the economics of stable coins. It's time for a separate discussion, but just that huge amount of interest, I think, will translate into a transform market, but then ultimately reality will hit home by the time frame you're describing.
Good stuff. And Arthur, please.
Well, there's two ways to answer the question. One is you can focus on the relative or the absolute. If you focus on the relative, I think what's underhyped right now is opening new markets, opening markets which don't already exist, which don't have substitutes. So Uranium obviously is interesting in that category. But when I see a lot of tokenized products which are available in dozens and dozens of venues, I'm a little less excited by that. I'm more excited by a private stock being tokenized and a public stock being tokenized because you're opening new markets. Now, geographically, it's true that sometimes something may be available geographically somewhere and not somewhere else. And so by tokenizing, you increase the global reach of an asset. That's also interesting. So this relative play is like looking for assets, perhaps commodities, assets where you traditionally haven't had markets sprouting and bringing market. I think that's very exciting. I would also, it's not an asset, but I would put prediction markets as well in this category. They are underserved markets by financial players. That's number one. The number two is like you can take the absolute view and what would be the dominant assets, irrespective of whether or not they're the one that we see on blockchains. The biggest, the most important things in the next 5 years are going to be things like energy and compute, just because of how the world is being transformed by AI. And so I think a safe answer is energy and compute.
Amazing. I actually wanted to follow up on that question, but we are running out of time. So just to wrap it up, I guess, we now understand that, this RWA, real-world asset tokenization, is just a thing. It's moving, and we have a great future. So let's definitely follow up on it. And that's it, folks. So, please join me thanking our panelists, Arthur, Nikki, and Kaya-san. And thank you so much for listening.
Thank you very much, everyone. ありがとうございました。We will now have a group photo, so may I ask all four of you to please gather in the middle and take a look at the camera and give us your biggest smile. はい、それでは皆様これより写真撮影を行います。会場の皆様どうぞ携帯カメラを準備になられました上、写真撮影を行ってください。はい、ありがとうございました。Mr. Breitman, Mr. Arya Singhe, Mr. Kanamori, and Mr. Kitazawa, thank you all very much. もう一度大きな拍手をお送りください。ありがとうございました。